Okay, let's dive right in and completely demystify a term that, honestly, you probably hear every single day but might not fully grasp. I'm talking about the stockbroker. Now, we all know they have something to do with the stock market, right? But today, we're really going to look under the hood. We're going to see exactly how they function as the absolute ultimate gatekeepers of the financial world.
So, think about this for a second. Imagine you want to own a tiny fraction of a massive multi-billion-dollar business. You can't exactly just walk into their corporate headquarters, drop a bag of cash on the receptionist's desk, and, demand a share of their profits. It just doesn't work that way. There is literally a massive invisible wall standing right between you and the open market.
Actually, let's look at it like this. Imagine you really want this highly sought-after toy. But there's a catch. It's locked inside this giant, super exclusive toy shop. You absolutely cannot just walk onto the floor yourself to grab what you want. No way. Only very specific, legally authorized special helpers are actually allowed inside.
Well, that special helper, that is your stockbroker. It's really that simple. You basically tell them, hey, I want a tiny piece of that company. And they run into the shop and fetch it for you. They are the licensed middleman, the crucial bridge that actually allows you to buy and sell shares on an exchange.
But, okay, stepping away from the toy shop analogy for a minute, a modern broker is a highly regulated, CB-registered intermediary. They are, for all intents and purposes, the official key holders to the market fortress. They provide that absolutely vital order routing access straight to the exchange order books. And that is exactly where the real magic happens.
Because behind those gates, brokers are managing this massive, totally hidden infrastructure. They're holding the technical trading rails and the depository rails that regular retail investors like us, and actually even massive institutional clients, well, we just simply aren't permitted to touch them directly. Without brokers bridging this gap, the modern market just wouldn't function, period.
Now you might be wondering, how do these gatekeepers actually make their money? Fundamentally, a broking house operates as a volume and float business. Their economic engine really revs up when clients trade frequently. Plus, they earn interest from the idle cash that's just kind of sitting temporarily in those client accounts. It's a pretty smart setup.
And it all comes down to a really delicate balancing act. The core math behind the whole broking industry really just weighs two main things. Exactly how much money it costs to get you to download their app and sign up versus the total lifetime revenue you're going to generate for them by actually trading.
And that lifetime revenue, it comes from a very specific mix. We're talking regular cash delivery trades, high-speed intraday trading, highly active futures and options trading, and even ancillary income like interest on margin funding. Simply put, the more active you are, the more profitable you become for the broker.
But hey, it's super important to remember that not all brokers approach this the exact same way. Actually, we essentially have two primary business models in the market today. On one side, you have the lean, tech-heavy, app-first discount platforms, and on the flip side, you've got the research-heavy, relationship-driven, full-service houses.
Let's ground this in the real world real quick. If we look at the Indian market, platforms like Grow, Zerodha, and Angel One absolutely dominate the discount model. They have completely different, much lower cost structures simply because they are entirely self-serve. Now, contrast that with full-service players like ICICI Direct or ARCSBL. They carry heavier fixed costs, sure, but that's because they're providing personalized human advisory and really deep research backing to their clients. So the broker you choose literally shapes exactly how you interact with the market. So ask yourself right now, when you invest, do you just need a fast, low-cost, self-serve vending machine? Or are you willing to pay just a little bit more for a personal guide who holds your hand? Honestly, evaluating which specific broker model actually aligns with your personal strategy, that's probably the most absolutely crucial first step you can take in your investing journey. So what kind of investor are you going to be?